Hello. How are you guys? How are you doing? This is Shocks and this is Shocks Capital YouTube channel. So today we want to talk about growing a small account from the likes of $5 to the likes of $50 to the likes of $100, $200 and things like that. All those are small accounts and we want to talk about how to grow them. But today we want to focus more on the ultra small ones, how to grow those ones and what you need to do. So I'm going to show you what you need to do and I'm going to give you some advice on those small accounts, what you need to do and what you need not to do, including trading the small accounts. So it's always good for you to get proper funding and fund your accounts with proper account balances. But let's say you cannot do that for some reason and you want to grow your $5 to a reasonable amount that you can use. So I will show you how to do that. But before we go any further, there are a lot of things on YouTube, a lot of videos that are telling you to grow $5, to grow $2, and even on Instagram, on Twitter, everywhere, everyone is talking about growing $5 consistently, $5 to 50,000. Those things are lies, and I don't want you to be gullible enough to believe them. So I'm going to show you, but this is not 100%, and this is something that will not work every time. Sometimes you are not going to grow that account and you are going to blow it, and that happens. But I'm just going to give you something that will give the odds, or that will give you a higher probability of growing that small account. So if this is something that you want to do, this is something that you want to know, follow through as I talk about this. So number one, you have to be very, very accurate. You have to plan. After planning, you have to wait. After waiting, you then execute. So after that, you have to understand that you have what? You have a higher time frame, a lower time frame, and an entry time frame. So what you need to do is to understand how price moves. If you understand how price moves, you understand where you need to get involved, right? So what you need to do here is very simple. You need to understand the H4. After understanding the H4, you need to understand what you are going to be doing on the lower time frames, right? So after that is said and done, on the H4 year, we're looking at the FX volatility 80, and this is offered on what? On WellTrade. The links to join WellTrade are in the description down below. This particular broker offers synthetic indices and currencies, so it depends what you want to trade on this particular one. So if you want to trade synthetics, you know what to do. You open a syntax account, and if you want to trade currencies, you open a pro account and start trading, right? So that out of the way, let's just get right into the charts. So this chart that you're looking for, that you're looking at, you can clearly see that we have been trending downwards for what? For days, for weeks, because this is the H4. So from what you are seeing here, we have dropped for how many weeks? For 2 weeks, right? And we are expecting another week of drop, which means that we want to see another drop on this particular chart. And as you can see here, you can clearly see that we have a what? A demand zone at this particular point, where price dropped here and is set base there and dropped again. So this one is the best. So if you then go to the lower time frame, you clearly see how that is working out for you on the lower time frame, and how you are supposed to be navigating that particular chart. So go to the H1 here. What do you see on the H1? Myself, what I see is we have this white order block from the H4. So let's remove it, and from here you can clearly see that price has been going up for days. This is the first push up, then we have another push up on this particular day, and we have another push up, which means we have 3 pushes to the high and the peak formation. And here we are expecting price to drop to these levels for starters, right? We want to at least to this level. So how do we do it? We see that price has taken out this low, as you can see. So this low has been taken out, and price goes back to the order block by taking out liquidity again in this area. So this is your order block. You are trying to find a setup that will have the opportunity, or that will have the highest probability of growing a small account. So the whole source, or the whole pattern or the whole formula is on the lower time frame, but here you are trying to put your pieces together so that you have a very beautiful setup and a higher probability of getting into that trade. And remember, if you are trading a small account, you need three things. You need a good setup, and you need a setup that gives you low drawdown. So you need a good setup, zero drawdown, because if you are entering with $5, for example, or $10, that is the stop loss. You only have one chance, or if you are lucky, you have two chances, right? So you need a commodity that moves very fast, right? Opposed to what your gurus tell you that you need a slow moving pair, right? No, you need a commodity that actually moves fast, and this is scalping. You are not trying to grow $5 to a 5,000 in one go. No, you get it step by step. You take $5 to $10, you take 10 to 20, 20 to 50, 50 to 100, and doing that consistently, you see that you will be a master of this. So we have identified our point of interest, which is which is this order block that you see here. So what do? We go down to the M15 time frame and see how that is working out for us on the M15. So you see the M15 is here. Price is going up. So when price goes up like this, you mark an order block again on the M15 so that you try to get what we call a sniper entry, right? So you have this order block that took out this low, as you can see here. This is the M15, remember. So this order block now, you try to enter from the 50% of that order block. So this is the 50% level of that particular order block right here, right? So that's when you try to get your entry, and your stop loss just goes above this order block right here. So you see that if you're having $5, you enter there in that particular half of the order block. If you enter in this half of the order block, you will see that your stop loss on the lowest lot size, your stop loss is going to be somewhere around $2 or something like that. And this is when you put the trigger. If you want to take it a step further, you will go to the M1 time frame and try to get an opening on that particular pair, right? So this is the M1 time frame, and on the M1, what are you looking for? On the M1, you're looking for a pattern that will take you down, or an M formation, a double top or something like that. So this is the M1. So on the M1, what I like to do is to wait for price to actually turn, break a structure, and come back and retest an order block. So if you see on the M1, you have this structure that was taken out, right? After that structure is taken out, you have this order block that is responsible for taking out this structure on M1. And if you were to use the M1, your entry was going to be at this particular point, and the stop loss was going to be above the order block. Or you can use the same logic as you were doing on the M15, where you target the midpoint of that order block on the edge, on the M1 too. So you try to minimize your risk to this area right here, as you can see. So this will be your risk where you are entering. You can enter this particular trade with a stop loss of even 50 cents, right, on the $5 account that you have. And as price moves from here to here, so this movement alone will give you more than $5, and you would have doubled your account. That is 100% gain on the account. And this is what you can do, and this is what you can employ. And if you are using this particular broker that I'm showing you these things, this is World Trade. And on the FX volatility 80 that I'm showing you here, this movement alone will give you all you need in terms of growing that $5 account to 15 to 20. Then you can continue doing this as if you still have $5, and you build on the small wins. So the most important thing when growing a small account, you need to get your setup right, and you need to win your first trade. After winning your first trade, then you can build up, you can compound as you go. But I just want to give you an advice. If you have the resources, trading a small account like $5 is not advisable, and you're not going to be successful every time, right? So you need to have luck on your side, because remember, this is $5. You can't expect to be trading for a living with $5, right? I'm not trashing on anyone. I'm just telling you guys what you need to do. If you have an opportunity to deposit more, you have to deposit more so that you put the odds or you manage your risk very carefully. So putting money in the trading account or putting more money does not guarantee you winning trades, right? It just gives you an edge when it comes to risk management, when it comes to managing your money and getting proper setups that you can let you have more drawdown, or that you can risk more percentage of your account, right? So if you are risking $5 on a $200 account, you are not risking much, right? So you need that cushion when you are trading, and you need to be involved in those kind of trades, right? So this is not financial advice, so I will see you guys in the next video. I hope you are going there and trying this on demo first, and if you see that it's working, you can try with your small account and try to grow your small account. So this is Shocks out, and I'll see you on the next video. Bye bye.